You know what? I take that back. I have like Eric, I have a standard of how many people that to me justifies getting rolling, and we've already hit it.
Yep.
So that's it.
Awesome.
Now it's time to get started. So welcome everyone again to this Placer AI webinar where we get to focus on one of my favorite sectors, the grocery sector. What we're going to do is first we're going to do a quick look at the holiday season and specifically how it impacts that sector. And then we're going to look ahead towards 2023 and some key lessons. And as always, we're going to take questions. If you have a question at any point throughout the webinar, please click on the Q&A button situated at either the top or bottom of your screen, depending on how you have Zoom configured. And then we will try to get to as many as possible, either within the course of the conversation or at the end. So definitely send them in as you have them, because sometimes time for questions is fairly limited, and we try to be sensitive of people's schedules. Our guest today is Eric Connor, Director of Strategy and Insights at dunnhumby North America. Mano, I've had the pleasure of having conversations like this many times, but never in this setting. So Eric, thank you so much for being here. Really excited.
Happy to be here.
And a quick introduction for those of you who are new to Placer, very, very brief. How do we get the data we're going to see? It is, we observe a panel of over 30 million devices. Very critically, this is all de-identified, not aggregate data. So we are GDPR and CCPA compliant. We then utilize AI and machine learning algorithms to analyze that data and make estimations on visits to retail locations across the country. We then show those amazing insights in a wealth of different features within our platform on everything from visit counts, cross-shopping, market share, and a whole lot more. If anyone is interested, there is a free version of the premium product available at our website at placer.ai. There's also a section called the Square, which is the home to our free tools that you are more than welcome to check out at your leisure. But now it's time to talk grocery. Turkey Wednesday. This is a day that, again, of our great accomplishments here at Placer, this is maybe the greatest one. I think we are the ones who named it, but it's the biggest day for grocery visits in America. And 2022 was exactly what we expected it to be, a massive surge in visits the day before Thanksgiving. And I think we always kind of think about other sectors within this lens of holidays, Cyber Monday, Black Friday, Super Saturday, spectacular, Thursday. But we don't really think about it a lot within the grocery space. Yet I think there are significant elements of kind of urgency that grocery chains can take advantage of. And so I guess the first question is what is missing for these days to be a part of kind of the grocery conversation? But even more, what can grocers do to take advantage of these moments of urgency?
Yeah, I mean, just looking at your chart here, it's not really a surprise to see who is over there on the leftmost winning. You see a lot of supermarkets, conventional supermarkets, who are winning and growing the fastest. And it's pretty in line with what we see from our clients, where you see sales be double what they were, the previous Wednesday or the week before on Turkey Wednesday, and similar to what you see with your visit growth. And I think it's a really big moment of urgency for those grocers, for conventional supermarkets in particular, just because a lot of their sales will disproportionately come from that day, one, and because they are more of a food destination than non-conventional grocers like a Walmart or a Costco, it tends to be a day that's just really important for them to get people in the door, spending more at them who might not usually do that, who might be shopping Costco more or Walmart more, or some non-conventional. So it's a chance for them to really show off and maybe get people to come in, the next week or the week after, or for their regular shopping. And so from that sense, it's an urgent moment for them to not only make a lot of profits, but to convince people to keep coming back later.
I mean, it's a really great point. I mean, a question came in, can you explain the grocery industry benchmark? So basically what we're showing you is specific brands and then the grocery sector more widely. So that's the grocery industry benchmark. And what you're seeing there is kind of those rising in visits, but those rises in visits. But I think you talk about something that's so important, which is kind of the taking advantage of opportunities, not just for the opportunity itself, but also for what it means long term. I think we think of all-in-one grocers like Albertsons, like Publix, like Kroger, like H-E-B, and kind of they were presented this opportunity during the pandemic to to really be there for customers, and they took advantage of it, and that's why we've seen the success continue. It happens on more regular basis with these kind of days that drive that degree of urgency. But I do think there's this other kind of element that, I mean, we phrased it opportunistic grocery, but it's like, it's the kind of this, do you recognize that there are unique opportunities in this environment? So as an example, we've seen longer visit durations. We've seen fewer visits per trip, kind of this return to mission driven shopping. You know, we know that gas prices are high. We know that costs are on everyone's mind. Is this opportunity that, like, I mean, I guess from a grocery perspective, how do you lean into the upsell opportunity, the opportunity for larger basket sizes? Like, how big of an opportunity is it, and what do groceries need to do to take advantage?
Yeah, I mean, I think for a lot of supermarkets, like conventional supermarkets, for whom the holidays are a chance for them to just get additional people again in the door who might not visit them as often, might not spend as much, because they have that food focused offering, particularly in like fresh meat, which was the centerpiece of the holiday table. They really need to build bigger baskets, not necessarily on that day, on the holiday day, because that's what people are coming in to do. They're coming in to do all their food spend there when they don't typically. It's more about building bigger baskets, and perhaps making moments other than holidays more significant for them. Because what we've seen happen over time is non-conventional retailers like Walmart, Costco, Aldi, and other limited SKU formats, other club formats, other supercenter formats have gotten more and more into food over the last 30 years, especially. A lot of conventional supermarkets have been relegated to the fill-in shop, and not necessarily the full shop for groceries, because people are able to stitch together their entire grocery basket across, let's say, Walmart for non-food, Costco stock up on produce and meat where they get high marks for quality, and they can go to Aldi for their dairy. And people are willing to do this because through that combination of all those retailers, they get the best combination of prices and quality across all the departments. And then you get like the supermarkets on, just random days of the week, who are treated like a 50,000 square foot convenience store. They might need to just run and get a few items really quickly, but they're not necessarily the best on quality and price anymore. So it's really important, I think, for supermarkets to try to drive bigger baskets, just for the day-to-day, the everyday shopping. And how they do that is, a lot of them have this wealth of customer data from loyalty programs. So they really need to use that data to really hone in their offering on having the best prices and the best promotions on the exact right products for the exact right person, and communicate it the exact right way, and make sure they have the assortment that's most relevant for the people in that area. So they really need to drive bigger baskets through just an understanding of the customer and being able to act on that understanding.
I mean, I like that idea of like the bigger basket size, especially. I mean, I know it's like a sillier idea, but like, I think one of the things, even something like, think of like the Hello Freshes and those kind of offerings, and how expensive those are from a business perspective to run because of the cost of acquisition. Like, isn't that just like an obvious thing of like meal kits to like be selling at grocery, and this ability to like take something that might be slightly higher margin and like as an offering to put together? Or, I'm trying to think what else fits within that grocery environment, but there are these other kind of levels that feel like, if you're the premium food element, that kind of those elements that you're going to come through, like there's got to be a way to increase it and make that a more significant focus. But I think overall, when we've looked at like kind of grocery performance in 2022, like it for the most part was up on pre-pandemic, but down on last year where there was those major surges. How did that align with your expectations for grocery visits this year, when you consider kind of the unique context and challenges that we faced in 22?
Yeah, I mean, they're kind of forces acting in opposite directions almost on visit trend compared to last year. Like you pointed out, 2021, probably a bigger year for visits. Just the world was opening up again, especially as we got into spring and summer. People were vaccinated, the lockdown was over, people were eager to get out and about, and they would, and you know what I find is interesting is visits were decreasing in Q2, Q3 of this year by your data compared to last year, but actual grocery transactions, the number of transactions we saw flat or increasing. So you know what that says to me is that there are more solo visits to grocery stores this year versus last year. There are more just multi-person visits, household visits, the family just getting out. It was something to do. Like finally, they could all go out together. I think
Also,
we're
you had
seeing.
nothing to do with them.
What's
Some of
that?
it was, I mean, there's this element of like, oh, we have this family trip. Part of it is,
Yeah.
I mean, what do not everyone's just sitting at home all day. Like there, I mean, it is an important element, but I wonder, I guess I'll add to that question as you kind of continue, even though I so rudely interrupted you.
No, that's fine.
This like, I mean, how do you contextualize these performances? Because I think that like what you're doing right now is a really important kind of perspective to bring, because you're looking at data year over year, but you're looking at years that were fundamentally different. And I think
Yeah.
that creates such a challenge when we're trying to understand visits across sectors, but specifically in grocery. I mean, what are the lenses that you're bringing to the table to try to contextualize what you're seeing, to like bring these ideas into the mix of, all right, transactions are up, visits are not up. What is that telling us about consumer behavior, et cetera?
Yeah, well, I think the one that we talked about, just consumers doing more solo visits this year, probably as more people are going into the office more often, sometimes against their will, but companies, I think, are wanting to bring people in at least a few days a week, and so people might be on the way home now just by themselves, and they're going in and doing the transaction versus taking the whole family when everybody's working from home. And also, I think from the point of view of inflation being a market force this year, one common behavior during times of inflation is to actually take more visits to the grocery store, do more transactions in a month, and spend less in each transaction. So you don't have to lay out as much money during each transaction. So that could be a reason why transaction volume might be flat or up as well. And then in combination with more solo visits, you might see visits down a little bit. So it's just it's interesting trying to the insights usually come from two different data points. At first showing conflicting information, but actually, if you think about it, there's an insight there.
Yeah, I mean, it's super interesting. It kind of leads nicely into what we're talking about kind of next, which is these consumer behaviors more specifically. I think, we've been talking about this obviously within, the Black Friday context a lot in the last couple of days of, yeah, visits were down even compared to 21, which was very surprising to us. But there is this really interesting shift of like longer visit durations in retailers. And there's this element of like the omni component of like, all right, so I find the stuff I want, I do my discovery, but then do I actually purchase online? Like, how do these things interplay? And I do think we're seeing these fascinating shifts in behavior that are coming at the same time of these wider trends that maybe are more traditionally impacted. But I do think we've seen consumer behavior shift and adapt in order to almost best take advantage of what brick and mortar can offer.
Yep.
And they're willing to tweak their patterns in order to maximize that offering. And so I mean, what does the consumer flexibility mean for grocery chains? And like, how do you roll out strategies to better take advantage? Does it change the way that a chain should be thinking strategically about, hey, the consumer is more flexible than we might have thought? Is that impacting how you would roll out certain programs?
Yeah, I guess response to that in a second, but one thing I just want to react to on this page here that I find super interesting, speaking of data points, which at first might conflict, but actually I think there's an insight, is the fact that dwell times are increasing, across these four chains you show here. But, that's, I don't know how it compares to the year previous, but we know compared to the year previous, basket sizes are actually a little bit smaller. So, let's just say across the industry, dwell times in stores are increasing, but basket sizes are smaller. So what are people doing with that extra time in the store? I'm willing to bet that they're probably spending a little extra time trying to save money, as inflation is a force acting on them. and time savings has been a consumer like need that's on the rise of importance. Pretty steadily the last 4, 5, 6 years, we've seen that in the data. But it could be that this year put a little bit of a stop to that, and maybe stalled it as just the need to save money becomes more important than the need to save time. So I wonder if that's happening, and I wouldn't be surprised there.
I mean, that's just, it's another great example. But like when you're, it does feel like these behavior shifts are happening fairly frequently. Like, does it?
Yeah.
How do you kind of? You're a grocery chain. You have tight margins. How do you stay on top of these very rapid shifts?
Yeah, and not just to your original question about being flexible. It just, in the pandemic, I think the last 3 years have really proved the power of the consumer. The consumers will react and change their behaviors when there's a big change to their context or just the broader market context. So that means it's really important for retailers to have their finger on the pulse of how their customers are behaving, what's important to them. And a lot of retailers have data, and they could say that they have the ability to keep their finger on the pulse, but where I think things fall down, and this is where a lot of retailers don't really have a strategy, is that they might be able to look at data and then pick a strategic directive from a loose analysis of the data, from just justification of their own sort of experience, but actually having the ability to thoroughly analyze the data and then get everybody in the organization agreed and bought into the rationale behind the strategic directive, and saying like, we've seen all this data, it says we need to take this directive, this makes sense for our company. We don't really see that happen enough. And then another thing we don't see happen enough is, once they've picked the strategic directive, is just being able to react nimbly to what the data is telling you. Because strategy, people like to think strategy could be like a script that's written out and you just follow it, but that's not actually what it is. It's more improvisational theater, where you need to have the ability to follow a direction, but month to month just look at your KPIs, how are things moving, be able to course correct to stay roughly in the right direction. You still need to move in that direction long term, but it's more of a jagged path in that direction rather than a straight line. And the jagged path is just representative of customer behaviors being a little bit fluid, and if you can react to those and over the long term, then you're going to win.
Yeah, I mean, it's such a great point. I also feel like there is this element of understanding where there's greater room for flexibility. Like, there's some things you can't change your store size day to day, right? That's obviously going to be hard. But you can change the way you kind of reach out to your customers, the way you communicate, the types of offerings you bring to the table. What are the things that are going to create that draw? There are certain elements that you can do much faster, and I think it's understanding the difference. I mean, a couple of interesting questions came in. One asked, could dwell times be connected to wait times at checkout? And I feel like, Eric, this is something your data would show more than ours. Have you seen an increase in kind of, that being an issue for customers?
That's not like off the top of my head. Every year we run an annual study where we gauge consumer satisfaction of retailers' value propositions and all their different touch points, and checkout speed is one of them. And actually, we're just getting into analyzing this year's data set, and I haven't seen there's no alarm bells that are ringing to say people are becoming less sort of satisfied with checkout speed this year compared to last year. But that's something I'll be able to get back to you on.
So that's a nice little plug for the dunnhumby work, right?
I'm back in January.
Yeah. And then there was a question: how closely does the timing of these year-to-date decreases again correlate to inflation metrics? The answer is, I mean, pretty closely. What was interesting was originally we saw it almost on a weekly basis, really tight with high gas prices. And so our assumption was that was the driving force of visit duration increases, but then it started to be a little bit more mixed. And so there is this assumption that inflation and kind of being a little bit more cost conscious is definitely playing a role. Though the fascinating was the severity of gas prices rose, visit durations rose, number of visits dropped. Like, it was pretty stark, but it is interesting. But now we get to go into one of the big questions of grocery, the merger. So Kroger and Albertsons, how big of a deal is this?
Yeah, I mean, it's a big deal, right? Lots of billions of dollars. But also, and this isn't another plug for anything, but I just had finished an analysis on this, and one thing that is important, I think, is to think of just this merger, or acquisition, really, of in the context of like the long term. And Kroger and has bought Albertsons and all their banners, or hopes to. I hope that goes through because they want greater scale to be able to, keep costs down relative to competitors who have even bigger scale, right? And also to get more eyeballs so they can sell data to their suppliers. And just the pursuit of more and more scale has been something that has been going on in grocery for the last 120 years, and it's the reason why certain formats or certain chains have rose and fell, because one has more scale than the other. And so from that sense, like, this acquisition isn't necessarily a surprise, because this has just been the response of supermarket chains really since the 50s. There's been lots of flurries of mergers and acquisitions in order to just have more scale to be able to compete. And I would say that if you look at the value propositions of the Kroger banners and the Albertsons Safeway banners, actually the Albertsons Safeway banners are a little bit weaker on their price perception than the Kroger banners. So for probably those Safeway Albertsons shoppers, this is a bigger deal, because this should hopefully improve the prices of the Albertsons Safeway banners. And the Kroger banners are already doing pretty well at that. And where I think it's going to be, a big deal probably for everybody else who's not Kroger, Walmart, and Amazon, is that this is just going to further create distance between those three and then everybody else, and their ability to just have a huge customer base to be able to then sell more retail media to suppliers off of. So I think it's just going to increase or widen the gap probably between the biggest 4 or 5 companies in grocery and everybody else.
I mean, that's a pretty big. That's a pretty big difference. Do you think it triggers other things? Because I think, like, Amazon's moving to grocery, I think, had an impact on the pursuit of innovation from a lot of grocery chains.
Yeah, that's what
you think there's like a. Yeah, do you think there's like a consequence of this in the wider space? Are we going to see like more acquisitions? Are we going to see certain kind of a push towards, all right, if we can't compete on value, we have to compete elsewhere? Like, what do you expect the impact to be?
Yeah, well, I mean, there's, it depends on who you are. Like, if you're, Walmart, Amazon, Costco, those big nationals with large scale already, I think they just, if anything, because this Kroger Albertsons move is a highly telegraphed move, right? It might be a few years until the joined up company can realize the benefits of this larger scale. So Walmart, Costco, Aldi, Amazon, the people who have been gaining share from supermarkets, they can probably, if anything, just lean into those strengths that got them there in the first place. Over the next few years, especially, you might see them respond by trying to prevent, people from staying with Kroger, Albertsons, Safeway banners, to steal those eyeballs away, leaning into their strengths. They have a few years to do that. If you're a regional conventional supermarket who's smaller, the response would be, right, looking for ways to gain more scale yourself. And that could be forming cooperatives somehow for retail media with other retailers. It could be, if you're large enough, acquiring other retailers. That would be, I would expect to see some of that happening too. And probably more behind the scenes, it's retailers leaning even more into the data they have to increase scale by, say, eliminating the long tail of products that you don't need to put on the shelf. So you could buy more of the products that people do want and give them more room on the shelf. So you have more volume of those to decrease their costs. So there's just lots of different responses I would expect, and they're warranted, and they need to happen, especially if you're, a supermarket chain that's smaller than Kroger and Safeway and Albertsons, which is every other one, right, in the US.
if you're one of the everyone else.
Yeah.
So a question came in: Kroger and Albertsons, the union, has to compete with Walmart, non-union, or excuse me, union-based, has to compete with Walmart, non-union. So is
Mhm.
there an approach to reduce costs to customers, or will they only widen the margin given the increase in market share? Hard to say at this point, correct. Sorry, I wanted to make sure we got that question in. I'm not sure I understood it fully.
No, yeah, it's a good. I think it's, it's basically saying, well, they will, if they have increased market share, are they just going to use this market share dominance to increase prices on customers to, help pay off their costs and have more profits, or are they going to use the scale to lower prices and benefit customers? I think it'll be more the latter, simply because they have to. Since even 2015, Alberts and Safeway merged, and their market share then, in terms of grocery sales, was actually higher than their market share now. So even with that merger, they still continue to lose share, with all the benefits of a merger. And Kroger's actually lost share overall since 2010, if you look at grocery sales, and that's because club formats, limited SKU discounters, digital formats, and the form of Amazon, those have all been formats that have been gaining share. So the supermarket, if you're a supermarket operator, and Kroger, Alberts, and Safeway they need to reduce prices to be more competitive, to stop that share loss, to start to turn it around, or else, it's this merger is it'll benefit right now, but in the long run, if the supermarket format continues to leak share to non-traditionals, then just in the long run, they're going to continue to not be able to compete with a Walmart and Amazon in that pursuit of insights monetization and the pursuit of customer sales.
That's super interesting. I mean, now I want to shift focus a little bit and look kind of ahead to
Mhm.
20 to 23. And you mentioned retail media networks in kind of your last comments. But I do think it's one of these, I think it's this thing that's gaining a lot of traction because there is this growing recognition of, wow, what we're doing with in-store media versus what we're doing with online media is there's a gap there, and it is this high margin kind of area. So, I mean, how significant do you think the expansions of the retail media networks are? And do you think it kind of signals something more wide about, kind of trying to be more innovative with what these brands and chains do with physical space?
Yeah, I think it's obviously very significant, since this is a more profitable revenue stream for grocery retailers than selling products to customers, and it's one that's growing probably faster than selling products to customers. So the changes here are significant in the sense that they're going to require changes for retailers to continue to stay competitive, and that means changes mean being innovative. So, if you want to be able to keep up with Amazon in this space, for instance, and Amazon has like 80% of the market share in retail media and selling to suppliers, and Walmart's a distant second with maybe, something in the single digits, and Kroger's behind that. If you want to be able to keep up with those retailers who just have a better position because they have larger scale to begin with, you need to be innovative. And, it's definitely an urgent need, given, like we said, more profits. It's a growth. It's a swim lane for growth for retailers.
Yeah, I mean, it's interesting. I was on a call earlier today talking about this with someone from the out of home space, and he was saying that like it does feel like this eureka moment is taking place,
Mhm.
which is we spent so much focus on kind of for me it's like the search engine optimization where there's this, you have intent because they look for words. Like if someone's in a store that close to the point of purchase,
Mhm.
there is an added value, and it's time to really start thinking creatively of like what happens in those locations to maximize that value.
Yeah,
um
I mean,
yeah.
grocery is tough. It's tough to get people's attention or divert it from their typical, what they typically do on their grocery visit, because if you think about like groceries and how people execute their grocery shopping, it's very I forget if it's system one or system two thinking, whatever one is, like really you're barely thinking about it, you're just moving through doing what you normally do, habitual thinking and behavior. So if you want people to notice like a shelf edge advertisement, or even if you have a smart cart, the little advertisement on your screen, or something popping in your phone, or a new sign in the store, it's going to be really tough to do, because people just, they're getting in and out of the grocery store. They just are looking for the products they usually look for. They're browsing shelves like they normally browse them, and getting them to change their behaviors or get them to behave in a way that they don't want to or they're not used to is really hard to do.
Do you think it's like it's an issue of getting them to change their behavior, or do you think it's an issue of like we need to think about how do we do these things within the physical store environment? Like a screen on a shopping cart is just like, people like screens. Let's put a screen on the shopping cart, as opposed to saying, what's the in-store behavior and how do we leverage that? Like, it feels like
that's the thing. Yeah, for sure. I think I just paraphrased it, but I was actually paraphrasing one executive from one of our clients. Is just if you ask people to behave in a way that they don't want to, they're going to behave in a way that involves them just leaving your store, right? Something like that. So it's not about changing behavior or putting something like new in the store that you think will work. It's like understanding deeply how customers behave and giving them something really useful at some point in their journey. And only in that instance can you have something else to monetize, like media. It has to be something that is just really deeply connected to a customer need, and in a way that doesn't ask them to behave in a way they don't want to.
Yeah, I mean, it's a really important point. I think when you look at kind of retailers or grocers that were doing obviously that were doing really well. I mean, we think about like H-E-B, who had this great bounce back, Aldi, Trader Joe's, who's been kind of a stalwart, much to our surprise, Winn-Dixie, who hadn't been doing as well and now has kind of bumped up a level. Like, what do you see as these kind of common threads or these kind of core elements, that these drivers of success?
Well, I think for like H-E-B, Aldi, Trader Joe's, and I'll start with like Aldi and Trader Joe's, and the group of retailers that are similar to them, meaning national chains who aren't the conventional supermarket. What we see from a lot of those retailers, like I mentioned before, is that they've really, they've burst on the scene in the last 30 years in food and beverage, and gone from virtually 0% share these non-conventional formats to about 60% of market share when you just compare them to supermarkets. And they've done that by having a really focused value proposition, where they try to win on maybe one specific benefit, and at the same time have really competitive prices. So they've broke the mold of requiring people to trade off on getting a benefit for better prices. They actually deliver more benefits than a supermarket at better prices, or at least the same. And this has allowed them to achieve a really strong customer value proposition. For instance, Aldi, they really fast to shop. They're one of the top retailers in the market in our annual study of which retailers are winning and why, and speed to shop. Also, one of the leaders, obviously, in prices. So they deliver that benefit to customers at much lower prices. Trader Joe's has really found a way to strike the balance of high quality and high prices, or low prices, or just good price perception. And they do that by most of their offering is private brand. They have a great store experience. They're able to keep costs down because they have just less SKUs. They don't have any complicated marketing they're doing, so there's no overhead to fund. They've kept prices down. And you have all these other non-conventionals, different reasons of keeping prices down and driving great benefits, and that's allowed them to thrive. And you have a retailer like H-E-B, more of the conventional regional supermarket. Mm-hmm. But H-E-B, kind of like a Publix or even a Market Basket, is another one up in the Northeast. How they've distinguished themselves and their results from other regional supermarkets is they've really just overwhelmed anybody else in their particular footprint, and haven't necessarily tried to spread too far beyond their heritage footprint. And they've just come to really have a cult following, to really represent the region too, and not just be a grocery store. And they're obviously really well-run places too, though they score really highly on just operations perceptions from
Hmm.
customers, just running the stores really well. So they're really well-run companies. And then like a retailer like a Winn-Dixie, they're obviously well-run too, and just you see, like, we're just talking about not poorly run or poor perception. We're just talking about better perception from maybe an H-E-B, Aldi, Trader Joe's. But Winn-Dixie, they have obviously strong on promotions, but what we've seen, regional conventional supermarkets during the pandemic have really benefited from the shift in the consumer context. During the pandemic, people their wallets were a little more padded through stimulus, through just having less opportunity to spend their money, record low unemployment. And then at the same time, people during the pandemic were obviously, there was heightened fear and anxiety. So people really just wanted to get in and out of a grocery store fast, not spend a lot of time away from home. So the shift in context towards people maybe valuing speed to shop, location convenience, having more money in their pockets made them actually less price sensitive. So you have regional supermarkets where typically not as competitive on price. They're able to actually get customers in the door, and COVID actually gave them some momentum. And I think we're seeing Winn-Dixie continue to carry that momentum they picked up during COVID. And when we know Winn-Dixie has a great loyalty program and executes that really well. So perhaps they've demonstrated to those those people that came in the door, they're spending a little extra at their store, that hey, we get you, we can develop a connection with you, we understand your behaviors, and we're rewarding them.
Yeah, I mean, it's an important one. I think the proximity one is a big one, but I feel like the kind of the point you made to start is maybe the most important one, which is, do you know like what your strength is? Like if you're focused on value, focus on value. If you're focused on convenience, focus on convenience. If you're focused on kind of operational excellence, make sure it's kind of, you can't be everything to everyone. I think this is this wide retail lesson. You have to be, what is the thing that makes you great? And do you know how to really emphasize that element? I think one piece where that comes into even almost greater kind of importance is when you think about kind of the competition between grocery and these superstores like the Targets, Walmarts. We consider Costco within that category. Dollar stores, which are increasingly kind of grabbing market share away from kind of grocery products. There does seem like grocery has held up rather well, even as there's been massive expansions in those other chains too. Think about the Dollar Generals, the Big Lots, the Five Belows of the world. How do you see that balance of power between these segments evolving, and what do you think grocery chains need to do to improve their relative positioning?
Yeah, no, I think like I mentioned, the time period you have here actually presented a reprieve for grocery stores, and just the longer term share loss they've been experiencing in the food and beverage space. Really the height of grocery store dominance was probably the early 80s, when they were around 70% of total food and beverage share for retail. And I think today, if you look at, quoting Edge Essential and their metrics they're about 40% of food and beverage sales. So that's a huge loss of share in about 30, 40 years. And it's been a steady loss as club stores, so superstores, club stores, super centers have been on the rise. And then limited SKU retailers like dollar stores, Aldi, have been on the rise. And now digital formats are taking share away from just the grocery store. But this time period you see here has given them a reprieve from that share loss because of the shifts in context that we mentioned. Just people being a little less price sensitive, and which has been a vulnerability of grocery stores to superstores and dollar stores, not as good on price. But then also, those convenient locations, those relatively smaller stores, at least the superstores, those things were more relevant during the pandemic. So what you would hope to see going forward, if you're a grocery store 2023 and beyond, is you carry that momentum that you picked up during the pandemic, that reversed your trajectory, and continuing it to carrying it forward into like longer term loyalty and to longer term share growth. And how you do that is, I think you obviously, we've talked about saving customers money is still the most dominant need for the most people in the US. So continuing to find ways to increase your price perception or make it better. But then also, like you said, at the same time, picking a benefit to really focus in on being great at, and not trying to be great at quality in all your departments, and while also saving customers time, while also having a great e-commerce experience, while also, you can go on and on, because if you're trying to serve and meet all of those benefits and be equally good at all of them, you're probably not going to be great enough at any one of them to be different. So it's really about picking an area of focus and being great at that, while also continuing to improve your overall price perception.
I mean, that's super important. We're running short on time, so I'm going to jump already to a question that came in. Do you think grocers are exploring trending more towards the 10 to 15,000 square foot footprint, or the 30 to 50,000 square foot footprint?
I think since they're mostly in that 30 to 50,000, probably at the upper end of that range for just like a supermarket, I think grocery stores are exploring just going smaller in general, just depending on wherever their starting point is. It could be going from 100,000 to 70,000 square foot and exploring that, or 50 to a 30, or 30 to a 10. But I think smaller formats seem to be what retailers are exploring more of, simply because it's just easier to get the real estate for a smaller format, one, but also because just that longer term trend towards save me time, even before COVID, was starting to gain relevance in the customer value proposition. So they're responding to customer needs too.
And chain level focus, like you mentioned, like, hey, I want Trader Joe's for this. Like we saw there was a crazy statistic we had of same day cross shopping with Trader Joe's in the state of Florida. It was like 10% of Trader Joe's visitors would visit a Publix on the same day.
Yep.
That was a crazy degree of cross shopping, but it means I use Trader Joe's for this, Publix for this. And that focus also makes the smaller location more advantageous and more efficient.
Yeah, I mean that's how customers want. That's how they've just grown accustomed to shopping now, is they build their basket across 4 or 5 different grocery chains in the course of a week or a month, because they recognize that certain retailers are really great at certain missions, and certain retailers aren't great for certain missions, and they know which missions to take to which retailers to get the best quality they can on the products where quality matters most, and to save the most money they can on the products where maybe quality doesn't matter as much. And customers are smart enough to recognize which retailers give you which.
All right. Sadly, we are up against it, and I want to take a minute to Eric to thank you for joining. This was a pleasure, just as expected, but even better. Thank you so much for being here today.
No problem.
And for those of you who are, we have our next webinar coming mid-December. It's our retail trends webinar, where we look at what's coming in 2023. And even more, for those of you who are planning to be in New York next week for ICSC, please send us a note, drop by. We're doing an event on December 6th, the day before, that Tuesday morning. So if you're going to be in town, please let us know. Shoot me a message and I'm happy to send you the link. I'm at ethan@placer.ai. But thank you so much for being here today. Eric, thank you so much for joining us, and hope everyone has a wonderful rest of the day.